Get on board, get on track, get to where you're going. And now, your EduTrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your EduTrainer and coach, and welcome to the entry level to life insurance. And I'm thankful that you're wanting to take our course because so many people are coming to our business: medical, property, casualty, securities. It's just great. PC agents. We're showing you our sponsor, Lincoln Benefit Life, their software program that you can go out and download. And the reason why we want you to do this is the Eclipse illustration software is voted as very user-friendly. We think it's great. If you're coming into our business and you're not really accustomed to doing proposals or illustrations, this is a very easy platform to use. We want you to go out and download it at www.lblsales.com/ETW. That's www.lblsales.com/ETW. When you come out, just go ahead and hit Run Installer, install it, and then next week and the weeks to come, when we use their software, you'll have it in front of you and you'll be able to go page by page with me, and it'll be an excellent tool for you to learn on. Also, remember, you can order the life manual, the basic life manual, and the life vocabulary. Just write me at thebiz@brokersalliance.com. That's thebiz, THEBIZ, at brokersalliance.com, and I'll send it to you. And anything you see in here, say, Steve, I like that one grid, I like that one spreadsheet. Could you send it to me? We're happy to do it. So when I'm looking at this, I'm looking at different things. Today we're looking at, we talked a little bit about guaranteed issue, but this is guaranteed and simplified professional vocational. And the difference here is, we're going to be talking about groups. Some people use this for COLI, for BOLI, for just group plans, and it's simplified issue. It doesn't have, if it's a very, very small group and everybody's healthy, I don't recommend doing this. But if you got a pretty good sized group, they'll show you the different issues. Look at some of these carriers. They will actually go guaranteed issue, not simplified issue, at 20 lives. You can even go down as low as 5 lives for simplified issue. So this is really a good spread between guaranteed issue all the way up to 20 and simplified issue all the way down to 5. They're going to issue the ages. This is really quite benevolent, I have to say, all the way out to age 70. Some of these carriers are to age 65. You want to look at all the highlights of each program. Everybody's guaranteed and simplified professional vocational programs are all different. The highlights and the features and the talking points of each program are digested. We don't have time for it today, but I did want to touch base and say we use this, and also they'll cite in their features what their maximum death benefit is. So you want to be able to look at all these, and sometimes I'll consolidate it on a census. Then I'll send it out to all the players here. In fact, I think I got a page 2 on this as well. I do. And I'm going to send it out to all the players, and I'm going to make sure that they all have a shot at bidding at this. Who's going to be the most benevolent in the least amount of medical requirements? Who's going to give us the best offer? Who's going to give us the best product? And after I've looked at all that and I've bidded it out, kind of like eBay, so to speak, only on the internet now with firewalls to our underwriters, and we create an idea of which carrier will be most benevolent for this specific group. And again, I love that the guaranteed issue can go all the way up to 20 lives, or a minimum of 20 lives, and all the way down to 5 lives for simplified issue. It's really important. Now, what I want to do is I want to touch on a few basic ideas. And let's clear that. And I want to talk, my first idea that I want to talk about is financial justification before I get into some other issues here. Justification. This is underwriting. Justification. There you go. Financial justification. I can't just ask for $10 million when my assets are under $1 million and my income isn't even 15 to 20 times that amount. Those are the two measurements. I'm going to look at total assets. I'm going to look at the timeline of those assets. I'm going to look at the rate that we think the growth is going to be. So let's say I thought the assets were going to grow at 3% per annum. My client and clients are a married couple, both 65. I'm thinking that the female will live maybe to 92 because she's super preferred non-smoker. And I'm going to say between the ages of 65 and 92, I'm going to have about 28 years or so. at this rate of return, 3%, and I may try to protect my client, so I'm going to go ahead and ask for that amount in the future today. So the underwriter is going to want to know, how did I come to that decision? How did I come to that death benefit? Well, I took their assets, the reasonable growth that I can prove. I looked at their timeline according to the second person's LE, because this is a married couple in this case. If it was single, it'd just be the one person. And I'm going to try to justify why I need that future death benefit, but I need to write it today. That's one area of justification. Now, think about it. What if I'm a young doctor and I just come on the scene? How can I get financial justification when I'm 33, this is an actual case, female, she's a doctor, and my client says, I have all this debt and so forth, but she's pulling down $150K. Some carriers will let me do, even though she doesn't have the asset base for this, they'll let me do 15 or even 20 times whatever she's earning for a death benefit. So I could be at $3 million here, no problem, even though she's so young and she really doesn't have the assets. She's probably got student loans like crazy, but it doesn't matter because I can use income justification. Even though I don't have the asset base, what is she making? What do I think that's going to be? And I can price that out and justify it. Now remember, a lot of times I'll look at justification in many other ways as well. I might say, I have a married couple. This is one we just looked at a couple days ago. He's 41, she's 38, they have 3 children. So I want to be able to say, I need a future education for the children. I need to be able to pay off my mortgage, all my ancillary debt like credit cards and so forth, my auto, my final expense. I want to list all this and say, that's what I need to do. I need to cover that and to give the survivor an income as if I would have been alive. I'm going to total all that so I can tell the underwriter, this is why I need $2 million or $3 million. The assets may not be there, but I might have futuristic issues that the underwriter, and remember, everybody's different on this. This is why I keep talking. It's different with every carrier, how they view justification. And this is just one area where I'm looking at justification so that you can understand, how can I price a death benefit? How can I get it up so high? I have to have reasons. I have to have financial reasons. Who's going to suffer economic loss? What dreams are not going to happen because I'm not there to earn the money because of an untimely passing? Now, also, I want to look at a couple things with the carriers. One's called retention. Every carrier has retention. I'm thinking of a carrier, they may have $1 million of retention. That means they can take the risk on themselves. They have enough capacity, enough reserves. Their pricing model works for $1 million worth of retention. But they write cases that are beyond $1 million all the time. And all of a sudden, if they get beyond their own retention, I've noticed also that they're going to be tied into things like auto bind or automatic treaties. And these automatic treaties help these carriers share risk. So my retention of my label company or the company I'm writing the application on, that $1 million, they could do that within their $1 million. And by the way, just remember, you can make calls that you normally may not get outside their retention. You may be able to have them make a business call. Normally maybe a waive of a requirement, maybe an upgrade in the offer that they normally would be able to do because our automatic treaties have already set up protocols, boundaries, and really actually framed what they will and will not take to share the risk. But within the retention, I can go ahead and say, gee, in my retention of $1 million, I'm going to ask this carrier for a little bit higher offer, and they can make the decision whether it fits in their model or not. If it was higher than that, and I'm talking about their automatic treaties and their auto bind, then I'm not going to get that. When I think about automatics, most carriers, like the carrier I'm thinking of here, that carrier could go up to $3 million in auto. Now, every once in a while, you'll get a call back, and the carrier will say, I'm sorry, we are going to table rate this client, table C. And we say, well, we can't sell that. And you're really one of the most benevolent underwriters there is on impaired risk and in substandard, the substandard community. I can't do it. So I might go out to this next one called facultative. Facultative reinsurance. I might try to pick the most benevolent I can as a carrier and have a relationship with them. But once this case goes to facultative, we lose control, and now the facultative carrier comes over, and they could actually come back and go table D. And we'd have to live with it or start the process all over with another carrier and hopefully get a preliminary done based on all the information we've collected, so we wouldn't have to go through the whole thing all over again, that we could try to collect it with the client's permission and the HIPAA authorization, which is why we have them sign it. So when I'm looking at this, I'm looking at retention, I'm looking at auto, I'm looking at facultative, and another big one, and I say that with tongue in cheek, called big one, well, it's called jumbo. When I'm writing huge cases, we just looked at a case for $54 million worth of coverage. I know it boggles the mind. Well, in most carrier arrangements, $65 million is the top out in jumbo. So $65 million death benefit, the case I talked about, would be within their jumbo limits. So that would be no problem. If I get outside that, I might have to network with several carriers who have huge jumbo limits. Now, remember, sometimes I like to patch quilt carriers that have huge retention. Think of it, one of the big companies that I'm thinking of has a retention of $30 million before they have to go outside for people under age 65. And that brings me to my other point, which is different retention, different automatics. They may have ages or different diseases where they have a treaty, but they won't have it with another disease. Everybody's very specific about this. So when you come in, the worst thing you want to do is shop it out yourself. You want to take it to a quality IMO, like ourselves as an example, and let us shop it for you, because we already know, as you've been learning, we really have spreadsheeted and gridded all the technical issues so that we can make an assessment way up front and figure out who's going to see this case. So we don't want to tie up underwriting and limits because we just shopped it to everybody and did a poor job doing it. We want to learn how to bundle. We want to learn how to package a case. And what we've done is we've learned how to design it very well. So the first thing I want to know from a carrier's point of view is, what's their retention? And when I'm talking about retention, I wonder how much they've ceded outside. In other words, I saw this carrier the other day, half of everything they write goes outside. 2/3, I saw in one other case, 2/3 of all the business they wrote stayed inside. Wow, they have that capacity. Sometimes when I need an underwriting decision, a really good decision, I'm trying to see who's got the best product with the highest retention so that I can argue, throw me a bone and give my client a little bit higher offer, a little bit better offer. And I can only do that if they have capacity issues, size issues. The client, I look at carriers all the time using our summary statements off the convention blank to find out what's your retention and how much have you ceded outside. That kind of gives me a pressure test, kind of a boilerplate way of measuring their ability to take on my case. So when I'm looking at these kind of issues, I'm always looking from an underwriting point of view. I'm looking at all these things, justification. And when I go back to justification on economics, I want to always hear this issue of who is the beneficiary, because the beneficiary is the person that has to suffer economic loss. I have to justify the amount of the death benefit, and I also have to target who will actually suffer loss. I could have a sizable estate justified, but if my beneficiary will not suffer loss, or the money won't be transferred to them for no good reason except for I was benevolent, the underwriters may take a look at this and say, whoa, well, let me look at this. So I'm looking always at justification and who are the beneficiaries involved. If it's in a partnership or a business, if I die, my partner will suffer by my absence, and they'll want a buy-sell agreement. We'll have to come to an amount, but I've already crossed one line, the beneficiary, who's going to suffer loss. So always think that way in justification. And what else? The beneficiary. Who will suffer economic loss if I'm not around?
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.